The idea of value investing is that stocks become mispriced, and they become mispriced essentially because of human nature. Human beings, with their emotions, with their greed and fear, will make errors in judgment. They'll overpay sometimes, and other times they'll sell something at a bargain price. And that a value investor, by being discerning, by doing deep fundamental analysis, by being patient and waiting for bargains, will have a real edge. Michael Lewis's Moneyball is an incredible example of that. Moneyball talked about Billy Beane, the general manager of the Oakland A's. The nature of his approach was to realize that people sometimes overemphasize what a player looks like. Literally, that's a very impressive athletic build that that player has. But you can actually look at the statistics and say, that player is not as good based on the numbers as this other player who maybe is a little pudgy, but they're able to walk a lot and get on base a lot or hit for power more than somebody else. People over-focusing on one type of athlete, one type of stock, one type of bond might mean that others are neglected, overlooked, and therefore undervalued, and therefore better available to you. I think that every investor wants to think about a differentiated perspective. Doing what everybody else does exactly the same way is going to end up with a market kind of result. But standing apart from the crowd, sometimes being a contrarian, other times simply having a different, unique perspective has a chance to really outperform. And so at the end of the day, you're not trying to build a team of how good people look. You're trying to build a team of how good people play.